Hey, it's Soleil, and this is episode 239 of the Orange Pill Investor. Of course, Friday is roll day, so let's get busy. Main account, just have MicroStrategy and Tesla in here. So let's see if I have anything expiring that needs to be rolled. So I got rid of all of my weeklies. I basically want to wait for MicroStrategy to have a massive rally before I start selling covered calls again, because I want to capture as much of that upside as possible. However, I'm having a little bit of a dilemma here because I think MicroStrategy earnings 11.6. Somebody said something about October 30th. So I will have to kind of watch this and make sure this doesn't change. But Tasty Trade is going to change their algorithm 3 days prior. So probably by 11.3, a bunch of this buying power will disappear. And I do not want to get a margin call. And the other weird thing is that people were talking about October, and then of course we've had a meh start to it. But really, we had Uptember because MicroStrategy was at 130 when September opened and had a small little dip, and then went to 170. So if the people that were expecting chop or even a down month in September, that might have been correct on Bitcoin. Let's see what Bitcoin did. Bitcoin on September 1st. I need my glasses. 58 and closed. Yeah, so it was up big time. Um, yeah, a red September did not materialize. Does that mean October is going to be red, or are we still going to get October? I don't really know. But I do know that I probably am going to need at least 80,000, maybe even close to 100,000 in buying power here when Tasty Trade nukes my margin requirements. So this one that's 28 days to expiration has been cooking since it was 45 days. So what is that? 17 days, been 2 weeks. I could roll this now, but I would probably barely be able to break even on this. So let's see what would happen if I try to roll these three. If I roll my expirations out to 49 days to expiration. Yeah, I can roll them out to 190 and basically break even on the premium. So I don't know that that actually helps me at all. So I may let these cook for another week or so, at least till Tuesday. Tuesday's the optimal day to really do the out of the money 45 DTE contracts, because Tuesdays is when you can get exactly 45 days. So I have another 8 that are at 35 days. So these definitely do not need to be rolled. So I will stand pat there. I've got 10 long calls. These were at their max. I think these were worth 600 or 700 bucks a pop, and I unloaded about 70 of them. But I still need to take some more profits somehow between now and 11.3. So I've got a month. So I guess I don't need to panic too much. However, MicroStrategy's back up to 170 again. So let's see if what I can get around at the money. I did 10 of these, I could collect 6 grand. And that's going to give me another a little bit, like 10% more buying power here. I may have to just do that because I need to, over the next 4 weeks, I'm going to have to take some profits here at some point. So I may have to peel off some long calls. All right, now let's just make sure. So I said that I wanted to keep at least 50 delta of uncovered upside for every 100 that I leave covered. So what do I have right now? I've got 890 uncovered delta here. So if I double that, that covers me for about 1800 worth of covered. And I have 11 covered already. So 1800 minus 1100 is 7. So I could sell 7 and still be comfortable where I'm at the level that I wanted. So let's sell 7 of these. Okay, pumps up my buying power a little bit. And I still have okay, this might be the first time I'm putting on my glasses on camera. What the hell? Okay, I have 2,200 shares. And I've got 18 covered. So I have 400 shares completely unlimited upside. And then I've got actually I could sell a couple more. Because this is 400 uncovered delta plus 900, that's 1,300. I could do 2 more. But I don't have to sell weeklies. I can go out to, let's do 2 more out to 49 days. And if I collect 1% a week times 4, that's going to be 17 times 4. So that's 68. I'm sorry, 1% a week is $1.70. So 6.8. So as long as I am collecting right about the mid price, right about here, let's do a nice even 230. Let's do 2 more of these. Pad my buying power a little bit more. This is getting closer to what I think I'm gonna need. All right, I like that. I got 10, 20. I got 20 covered calls. I have 200 unlimited upside. And I've got about 900 delta here. So 900 plus 200 is 1100, which is exactly how much uncovered delta I said I wanted to keep at a bare minimum. So I'm pretty happy with this. I sold this out to 45 DTE and it's got 10 days left on it. I don't feel the need to roll this right away. So that was done. That was quick. The IRA, 35 days to expiration left on these 210 strikes. There is a little over half of the premium left. So I may actually start rolling these on Tuesdays, since that's when I can get exactly 45 days to expiration. So I might have 2 roll days a week. I might have my 45 days to expiration rolls on Tuesdays and then my weekly rolls on Fridays. So these 2 speculative long calls are doing well. And then these 4 are doing all right as well. These are both leaps on different. Oh, I'm sorry. I get myself a little confused. These are the speculative leaps. These are the way out of the money ones. These are the 2 in the monies that I'm using to sell covered calls against. Yeah, so I've got 2 poor man's covered calls, and I've got 300 shares that I'm selling covered calls against, and I've got 5 covered calls, 2 against the leaps and 3 against the shares. So there's really nothing for me to do here. Nothing pressing. And if you'll notice, for anybody, I mean, selling weekly covered calls is already low maintenance enough, but doing the 45 days ones is really low maintenance. Like you only really have to look at them every 2 to 3 weeks. But a quick note on MicroStrategy, someone mentioned to me, because back a few months ago, I was trying to get 20% callaway value and 1% premium, and that is no longer really available. So trying to get 1% at 20% callaway value, that's like $34 plus the current price. So you have to go up to like 205. That's only what? Not even 0.5%. And so some trade-offs have to be made either to collect less premium per week or try to collect the 1% at 190, and that's only $20 of callaway, so that's just over 10%. The premiums on MicroStrategy are still some of the best in the market. There could be some extremely risky stocks that maybe have worse premium than this, but it does make me a little bit nervous to only be collecting or to only allow like 12% callaway value here when the price can rip to 200, 225 easily in a week. So just be cautious about that, especially for people who are very protective of their shares. So just because when the market is really firing and you can get tons of callaway value, tons of premium, that's not forever. So always have to be paying attention to what you can get and what the trade-offs are between premium and callaway value. And one day, if MicroStrategy stops delivering these kind of premiums completely, then maybe I won't be selling covered calls against them. You used to be able to get a bunch of premium and callaway value on Tesla, but Tesla has kind of calmed down a bit as well. The premiums might be coming up a little bit because Tesla earnings is going to be 10/16, so that's only 12 days away. Generally, the implied volatility starts creeping up as earnings approaches, so the premium on Tesla might be getting better. I don't know if there's any speculation on their, was it 10/10 event, But it'll be interesting to see if we finally get a favorable reaction. It seems like all these investor events or battery day and all these other things, Tesla's market has a negative market reaction. So it'd be nice to get a rally off of one for once. So crossing my fingers, but not hopeful. It usually seems like the market is always disappointed with their presentations. They kind of want to be spoon fed certain pieces of information that that they, you know, are kind of not reasonable expectations. All right, this CLSK debit spread is, still has plenty of time on it. So this will be win or lose. Nothing to do right now. Got 100 shares in this joint account. Again, I've got 35 days to I've got 35 days of expiration. That's right. I sold a put, a 150 put. So nothing to do with this one. This is the covered call, also at 35 days. So no rush here. I've got one long call. It's not a leaps because it's only 6 months to expiration, but that's doing pretty well. I'm still not anxious about selling this. Closer to 90 days to expiration, that's when I'll really be looking to make a decision on this for sure, and have one leaps in this account. That's doing not too bad. All right, so it's kind of boring. Nothing to really do here either. Now that I've moved to some of these longer duration contracts. All right, so the 5K account, I still do have a couple of these weeklies that I sell. So let's take a look at the $9 call expiring today. This one is nice because CLSK is actually recovering quite a bit. So not exactly wrecked necessarily, but I only sold it for 20 and I'm going to have to buy it back for 30. But I'm still happy about it because the price of CLSK is recovering. So that is always going to be a good thing. But this just showcases how, even though my cost basis on this is like, hold on, let me finish this trade first. Then I'll go look. I think it's like 12 or 15, something like that. I don't fret about that too much, about picking a strike under my cost basis. Occasionally it will happen and you get screwed. But in my opinion, it's too late to kind of unfuck the trade. If you bought shares at 15 and the price collapses to 9, you already screwed that up. There's no way to fix that. So you can bag hold and you can just refuse to collect premium until the price goes back to 15. But I tend not to do that. I want to continue to sell premium at whatever I can get and then add to my positions and dollar cost average into new contracts. And hopefully my average cost will get down to a reasonable level. So that's why I sold a couple of puts here that are ended up not going to be assigned, but I'll roll at least one of these out to next week. But let's sell my covered call first. So I'm going to go out another week. I'm going to build about 10% call away value in here. So that's 92 cents. That gets me close to like 10.50. And I can collect at least 1% against that. So let's make that happen. Cha-ching. Let's take a look at the two puts that I sold. I just picked up a few pennies here. Sold them for 15, so let's buy them both back for 2. And let's check my buying power first. Let me refresh this. Shouldn't be using a ton of margin at this point. Yeah. So I think I went a little, did I go a little overboard? Let's sell another put for next week. And I'm just going to sell the $9 at the money. But I may do 2. But maybe not, because this is the official buying power. I don't want to go too crazy. I think whoops. For next week, selling 2 of them was probably going a little overboard because that was only brought me down to like 1K of buying power. This could be a little screwy too because I'm not sure if the funds settled on the puts that I just sold, but I'm going to collect 32 on $900 worth of collateral. That's like 3.5% for the week. If CLSK drops below 9, I'll get assigned shares. That'll help me dollar cost average this damn thing down a little bit. I think that was the only other thing. Let's see, that was expiring today. So those are good for next week. This 11-8 call. It's about a month. So no urgency on this one. Same thing for 11-8 on Riot. I think I'm done here. Yeah, this is fake. They're saying that I have 6K in buying power, but you saw it when I went actually to purchase the options. It was only like half of that. So just be careful when you're trading on margin because these little calculations are generally not too accurate. I've still got 3 of these long calls for February. I will probably make a decision on these by November 21st. Same thing with Tesla. But it might be a good idea now to see if there are any that I can afford in this account that are longer. So let's go out to over 180 days if I can. Let's see if I can afford anything in April. In a small account, shelling out $1,000 for a long call is asking quite a lot. Let's see what I can do in March. $900. Yeah, I still can't justify that. Yeah, these ones that I have in February are barely affordable enough. But and really having $1,500 locked up in an account this small is way too much. This is pretty extreme. Probably 10% at most in leaps on an account. But I then again, if you're young and you still got your life ahead and you can afford a YOLO, maybe it's okay. Not financial advice, of course. But yeah, even 10% of this would still be only like $750. So what do I have? 20% of this account in MSTR leaps. That's kind of dangerous. All right, that is it. That might have been record time. All right, be good, Joe.